Here's a fact that shocks most expats. If you move to another EU country and don't sort your health insurance within 90 days, your existing policy can be declared void, retroactively, leaving you liable for every medical bill from day one. Yes, even bills you already thought were paid. So here's exactly what you need to do. First, check whether your destination country requires you to register with the public health system before private insurance kicks in. In Germany, for example, if you're employed, you're legally required to join a statutory insurer, a Krankenkasse AT, under Social Code Book 5, SGB VI. You can't simply opt for private cover unless you earn above the 2026 threshold of around 69 to 300 euros annually. Second, if you're self-employed or arriving from outside the EU, get an internationally recognized expat health plan. Providers like Cigna Global or AXA's expatriate division offer compliant policies, but read the pre-existing condition exclusion window, typically 12 months. Third, request your S1 form from your home country's National Health Authority. For Americans, that doesn't apply, but for Brits post-Brexit, it coordinates NHS entitlements with your host country's system. The critical mistake? Assuming your travel insurance covers long-term residency. It doesn't. After 90 days, most travel policies are completely invalid, and a single hospital stay in Germany can cost 15,000 euros out of pocket. What country are you moving to? And have you sorted your health cover yet? This is general information only. Always consult a qualified professional. Subscribe. We help expats in Europe navigate the system every single day.